Hi, everyone. We'd like to welcome you to Storj's Town Hall on July 30th for the second quarter. I am Colby Winegar, Storj's Chief Executive Officer.
I'm John Gleeson, Storj's Chief Business Development Officer, and looking forward to sharing with you um, this town hall, which is part of our overall commitment to transparency. In addition to quarterly town halls, we also make our open source code available for those who are running the code. We have a public roadmap available on GitHub. We maintain our presence in our forum and blog regularly with new and exciting things coming out about storage. And of course, the quarterly token reports that show the token balances and flows to provide a full layer of transparency on tokenomics. We do provide live network stats via API, and a number of our community members have built dashboards on top of that. We have these community reports that you can see both from the storage node side, but also from the demand side. And then finally, we regularly publish our DEI reports in terms of what our commitments are in building a more equitable organization. And finally, publishing our sustainability initiatives, as Storj's approach to cloud services is one of the most environmentally friendly ways to deliver cloud services. And one last forward-looking statement just before we begin. This presentation contains forward-looking statements and information related to Storj's product, network, and business. These statements are based on the information currently available to the company with respect to future events and are subject to unknown material risks and uncertainties that may cause our actual results or performance to be materially different than those contained in the forward-looking statements. This information should not be relied upon in making purchase or other decisions. And finally, the development, release, and timing of any features or functionality described in our products remains the sole discretion of Storj Labs. All right, Colby, you want to take it away with the executive update?
Sure. So I'll do a couple of market slides for those that may be listening for the first time. We're really excited to be in the space we're in, right? It is a very large space. There's no question that the cloud space is large. It's growing. It continues to grow quickly year over year. One of the largest segments, one of the hottest segments right now. It was already an exciting segment, and then with the growth of AI, it's made it even more exciting. We think we have a very unique solution in this space that allows us to have a competitive advantage and provide radically different performance and economics and security for our customers. And we think this gets even better as we get at scale. And we've scaled a lot over the last year. We have a great team. We've found some markets where we have a lot of traction. And if you looked at our revenue year over year and on the calendar year basis, we grew 7x. So we're definitely in a spot where we have a really exciting market to be in. And we've been growing really fast. One of the things that's driving that is that the amount of data people are storing is growing incredibly fast. So it's about 23% year over year. The AI workloads are creating a huge demand for compute and also increased demand for storage. I'm still surprised at how the stats that I see are facts that talk about the underutilization of compute and storage in data centers. And so I feel like we're in a really unique spot to be able to take advantage of that underutilized infrastructure for customers. We talk a lot about how we're the Airbnb for the cloud, and we've seen the advantages we have with that approach and that strategy. We especially see that's going to have a lot of advantages as we expand to new markets where we don't have to spend the CapEx to build new data centers, but we can leverage the existing infrastructure that's underutilized, that's already in place. So what's happened over the last Q2? We've had an exciting quarter, and probably, I believe for the first time, we'd like to announce the revenue that we have as a company. We crossed $1 million in monthly recurring revenue in this year, and we ended June at 13.1 million in annual recurring revenue. So we haven't been public about this in the past, but we decided to do that just because when we were at conferences and people realized that we actually have, when we're at a Web3 conference and customers hear that we actually have real customers and we're in 8 digits of revenue, they're very surprised and excited to see that a Web3 company is having this much success and that is having real world customers and real world traction. And so we thought it'd be great for the Web3 community to share the success that we're having, to show that this is possible, to make that leap from a Web3 company to servicing real Web2 customers and getting substantial revenue. So thank you everyone who's participated in this journey to get us to this point. We think it's a major accomplishment, and thank you for all of you that supported us. Another accomplishment was announcing the $5 per month minimum object storage account fee for each customer. We saw that we had a lot of really small customers, and it creates some overhead to manage all those smaller accounts. It can help avoid abuse. And so thank you for the community to give the feedback for how to implement this. That was the great feedback, and we listened and we responded. And so we really, really appreciate that. We also closed some high impact deals. So one deal was with a Korean government funded research institute. And another one was with the Move, and we'll talk about that more later. We had a deal with an NFL stadium, and sorry for the lack of transparency on the names. With some of these, we don't have the agreement in place to share the names. Atomos is another one. I believe we announced that last time, but actually closed in the second quarter. So we have that here, but they're a great partner that sells hardware in the media and entertainment space. And we first signed our first petabyte plus AI customer that's doing AI workloads, that's storing data with us. And so excited to see that come on board. And then we signed up one of the largest hospitals in the world. Again, can't name the name, but it's one of the top names in the world in hospitals. So excited to have them as a customer.
So in terms of what the trend is on storage growth and compute hours growth, this set of slides is something that we have shown before. This gives you some context that goes with the announcement of our actual revenue rate. And so when you look at storage with a 10.1% compound monthly growth rate, in our industry, it's normal to be growing something like 20% a year. And we're doing that every 2 months in storage, which is really exciting. And then on the compute side, we're seeing about 10% compound monthly growth rate, which again, almost as good as the storage, down a little bit from what it's been over the past few months, but mostly related to one large customer. And that rate is still phenomenal for anybody in the technology space. In terms of our quarterly revenue, when you look at the trends across the board, clearly from the end of 2023, where we really started to see those first enterprise customers coming on board, and then in 2024, it really just starts to take off. And through 2025, now we're seeing between 2023 to 2024 to 2025, now just phenomenal growth across the board. And so when we look at where we are at 177% compound growth, like that is just absolutely an amazing outcome for our organization. And we don't see that stopping anytime soon. We've really identified product market fit in a few key markets. And this is really just the culmination of just really driving forward with this project over so many years. And it takes a lot to get a infrastructure as a service going, but once you do, they tend to grow steadily. And if you're doing it right, customers stay with you for the long haul. And that's what we're seeing in this chart, and we're really proud of this one. In terms of what is actually in the pipeline and how we're going to keep moving that forward, we have a lot of really great opportunities. A few that we'd like to highlight. We do have a large private cloud partner in India, and so that's a sovereign data solution where they'd be running the Storj software on a private network. So that's a great opportunity for a media cloud. We have 3 of the largest movie studios currently in POC with our product. We have one of the largest consumer technology companies in the world also testing our object mount solution. 3 large professional 3-letter sports organizations in the US, and then just a whole slew of large compute opportunities as the market shifts more heavily into AI across the board. Really, enterprise access to low cost, high performance compute is just a critical spot to be in the market. A lot of these opportunities could individually double or triple our revenue and massively increase our enterprise value. So really excited. So it's a lot of home runs, but just a ton of singles and doubles right behind them. Just a phenomenal pipeline for the rest of the year.
Great. And so, as you guys know, we brought Object Mount on board last year, and it started off as KunoFS, but we renamed it to Object Mount. We're very excited about this product. It enables you to have a distributed file capability that's mounted onto your desktop or to your server, and get access to object storage or any S3 compatible storage system. And so we've heard a lot of great feedback about this product, and especially in the media and entertainment space, where they want to have on-prem performance when they store their content in the cloud. And we are currently doing free trials of Object Mount. If any of you think you can use this in any of your applications, please reach out. You can find more information about this at objectmount.com. This is the product where we won Product of the Year at NAB, the largest media show, in April. And so super excited to see this, super excited about the features that we have coming in the pipeline.
And then on the compute side, Voldy, our GPU offering is growing and expanding into new use cases. And so for those of you who are new to the town hall, Voldy is our GPU as a service business, and we offer both on-demand GPU where you can log into a portal and swipe a credit card and start using GPU immediately. And we also have reserve capacity. So for customers who want to buy tens or thousands of GPUs and lock them down for the long term for either model training or inference at the edge, we offer both of those at a substantially lower price than you might find at any of the hyperscalers. And we're really excited about this because we have found both our storage customers have been very interested and have been using a lot of GPUs, and particularly where we're able to serve those broader needs of the customers, we're really seeing a lot of traction now in the media and entertainment industry, which dovetails very nicely with where the storage business has been going. And so you can go online to valdi.ai and access our incredible inventory of GPUs. You can sign up and use any of those GPUs on demand immediately at a fraction of the price of what you'd see on any of the hyperscalers. And you can also see the inventory of what's available currently for reserve capacity as well. And if you don't see it, you can certainly ask and we can get it for you. A lot of sort of people, when they're looking at our GPU offering, they're asking, how are you different from the other players in the space? And a lot of the key things that we bring to the table that very few others, if any, do well at all, is that we have built a supply of incredibly high quality enterprise grade nodes, with hundreds of neo clouds springing up over the last few years, and some operated by quality operators and some not. It's oftentimes very difficult to predict what level of quality you'll get. And for the AI industry that moves so fast, it's important to get exactly what you need with high quality and uptime, to really stay ahead of the race. And we provide not only those amazing GPUs, but also the trusted expertise, both on the pre-sale side in helping customers choose the right GPUs or even benchmark different GPUs for their workloads to get going, but also the customer support on the back end. So if something does go wrong or if something isn't performing as expected, we're there to help optimize and respond as quickly as possible. And again, all of that comes with exceptional economics. And so these are GPUs that are coming at a fraction of the price of what you'd find on the market today, with the expertise, the customer support, and the high quality. So we're excited, our customers are excited, and we are really bullish about how this will continue to grow.
Great. So we want to share with you one success story. We have one of our partners we've had for a long time. It's called The Move, and they have a product that allows you, well, they can do a couple of things. They can help move your data between different object storage platforms, and they can also help you have a easy to access software on your computer to access your object storage. And they've recently been building this for the M&E space, and they've signed a contract with us to that's a multiple petabyte contract. And so we're really excited about this. There has already been about a petabyte that's been uploaded onto the platform, and they have more coming. And so excited about them as a customer and partner, and the growth that we can see with them going forward. They're in the great M&E space. They're driving some new features for our products that will help in the M&E space, which I think will drive more adoption. and excited to see the traction that they're having, the success we're having there. I wish we had the time to talk about all of the different customers and partners that came on over the last quarter that we mentioned earlier, but all are good examples of traction that the company's having, and that the customer adoption that we're getting.
So last thing that we want to cover today is just an update on our tokenomics. So this quarter, we continue, of course, to be one of the leaders in DeepIn, whether you're looking at the Web3 index or any of the other indexes out there. We are and remain one of the few DeepIn projects that is already competitive with hyperscalers and that is attracting significant business from Amazon, Google, Microsoft, and others. We're also seeing rapid growth in not just Web2, but with Web3 customers migrating workloads from the hyperscalers over to DeepIn infrastructure. So it's not the case anymore that the DeepIn infrastructure is the more complicated and slower version of cloud services. It's the faster, better way to go at much lower costs. And with hyperscalers eliminating their startup credits programs left and right, the economics of Storj make even more sense. We also announced this update to our tokenomics plan. And so as we shift from really having a stable network to hyper growth, it's very key to us that we're able to deliver that sustainable tokenomics to give new participants in the ecosystem the confidence to contribute storage and compute resources. And so we did announce this quarter that we are buying back 5% of our storage node operator payout starting now for June earnings. And then we are creating a staking mechanism to allow those storage node operators to stake their storage to stabilize the reward mechanisms and provide new rewards with regards to that buyback. And so we're really excited about how this is going to evolve over the course of the next year, and really see this as pivotal to our strategy moving forward.
Yeah, so thanks for that, John, and thanks also for everybody for the feedback on the tokenomics. Going forward, we have a few big events that are coming in September. We're going to be going to IBC, and so that's really the second largest media show in the world, and that's in Amsterdam, and that should be a big event for us. Have a lot of exciting things going on at that event, and so if any of you are in Europe and haven't had a chance to see us in person, please meet us there. We have some people from the community meet us at those shows, and that's always fun. HSG is a genomics conference in Boston in October, and so that's a big one for our PetaSuite product. We're starting to see some crossover where we're starting to see some synergies between that product as well as our storage solutions. So excited to see how that develops. And then in October, we have NAB New York, which is another media show, kind of more of a regional media show in New York City. Gained some great customers from that one in the past, and so and partners as well. And so again, if any of you are around at those shows, please do stop by our booth and say hi.
So,
all right, go ahead.
Oh yeah, I was just going to say, wrapping up. So as always, we want to extend a big thanks to our storage node operator community, especially this quarter with so much feedback on so many different programs that have really added a lot of value to the decisions we've made and the things that we've done in terms of rolling out the $5 minimum, in terms of our tokenomics and the ongoing feedback there. This network isn't possible without you. And so we want to say thank you again.
Thank you, everyone.